Did you panic sell all of your SoFi stock when it dipped? Or are you ignoring the noise and doubling down? Ladies and gents, we know we feel like we're waiting for Steve Harvey to announce the new Miss Universe with the bank charter approval. From chilling at about $23.29 per share just last November 4th, SoFi stock has nosedived into the low teens and is now sitting at about $13 to $14 per share, at least at the time of recording this video. Also, take into consideration this price dive is happening despite the fact that SoFi the company has been absolutely crushing all key metrics that matter, and every single analyst that covers the stock has issued buy ratings and price targets in the mid to high 20s. Just so you know, if you panic sold your SoFi stock, we're looking at you like this. Just kidding. Welcome to Wealth Gambit. On this channel, we cover all things stocks, from stock news to fundamental analysis. Just a disclaimer, we are not financial advisors, so please always do your own due diligence. By the way, if you haven't already, be sure to follow us on our social media pages to be updated with more stock news, market updates, and some awesome SoFi memes. Also, shout out to all of you guys who've been commenting and liking these videos. We made a Wealth Gambit Hall of Fame for the real OGs, so here's a quick shout out to all of you. Make sure to comment as many times as possible on these videos to possibly make it into the Hall of Fame. With that being said, let's crack right into this. When you look at the analyst ratings for this month, or even months ago, it's either a hold or a buy, and there's only one fact that could explain this. SoFi is deeply undervalued today, in our opinion. According to MarketBeat, the price target for SoFi ranges from $24 to $25 per share, and that's coming from a big-time brokerage firm like Morgan Stanley, Rosenblatt Securities, Citigroup, and many more. Not a sell rating in sight, God bless. When a stock is undervalued, it means that the market price does not necessarily represent its true value or the fundamentals it has in the long run. Grandpa Buffett used and popularized this investing strategy, and look at him now. The Oracle of Omaha now chills around with an estimated $108.9 billion net worth. But let's not forget the odds that some companies that are undervalued trigger a definitive loss of profitability and prolonged neglect by the market in spite of better earnings, at least according to Benjamin Graham. So let's hop on the key reasons why you should consider this shopping spree on SoFi. We're all aware of macroeconomic factors affecting stock prices, from health crisis concerns endlessly popping out of nowhere, and on top of that, high inflation and even a supply chain crisis. Now, let's take a look at the price to sales ratio. When you use this ratio, you get to see how much the company is valued at compared to how much money it actually pulls in. SoFi shows gradual growth in revenues in the coming year, and SoFi is projected to earn about $1.5 billion in revenue, which will be a 47% year-over-year growth. And as long as the price to sales ratio is low, the upside will remain high, at least in our opinion. As we've mentioned in a previous video featuring Chris Lapointe with SoFi's chief financial officer, SoFi isn't yet profitable, and this is because they are prioritizing growth, which means they also have growing expenses. It's normal to see investors backing out when a company underperforms, but sometimes it's just considered market noise, especially when a company is performing well and even beating expectations. For beginner investors, you may be panicking, but for those of you longs, we know you're smiling, because a lot of the money that is made in stocks is made when you buy, and when you buy low and sell high, if at all. When a stock is rocketing towards the moon, it's an awesome feeling to know that you and all your friends who invested are making money, but it's also sad because you know you can't throw more money into the stock like you used to, because oftentimes it's rocketing towards fair valuation or even in some cases overvaluation. So ladies and gents, think of SoFi being in the low 13s and 14s like watching a baby grow up, because once they grow up, you never get to see them as a baby again, and we here at Wealth Gambit have a strong feeling that the same can be said about SoFi stock price at this range. So enjoy it while it lasts. We will be throwing all the free capital we have at it. So like always, see you in the trenches. Let us know how many shares you will be buying to automatically get shouted out in the next one. And if you want to see more from us, be sure to follow us on our social media platforms at Wealth Gambit. And until next time, peace.